Natural gas is set for a possible retrace for a couple of reasons. We've got a slight support area here, and also we've got these fair value gaps and a possible bullish divergence on the hourly, and I'll cover that in a moment. So looking at the natural gas commodity price first on the daily, we do trade on the hourly in a direction of the daily trend. So the daily is broken below the moving average band of the price, and so is the CCI. Now you'll notice here as well, we had a bearish divergence on the CCI versus the price, and that's actually taken effect, broken down through our 23.38% Fibonacci retrace level. As I said, it's currently hitting this minor support at 36.58, and it's been sort of sitting there for a number of days. What that looks like on the hourly, again, we've got a bullish divergence here on the hourly. Now we did draw this on for our last video to that point, and what we're going to do now is extend that higher lows on the CCI to that point there, extend that to there. So it's a slight, probably almost an equal bottom there on that, off that support. And what that means is if it does retrace, we can expect a minimum retrace, and it hits this minimum more than 90% of the time to this 23.38% level of that Fibonacci range. Now, of course, the price can keep dropping and break through that support. So long as that CCI keeps rising and that price remains in a downtrend, we're going to keep that bullish divergence in play. But assuming it pulls back from where it is at the moment, that's our minimum target. Also, in terms of the back test, speed this up a bit. In terms of the back test, going short from this period, again, trading in direction of the daily, you would have taken these short trades. And the way we read that is go short in the direction of the moving average of the price on the hourly. And whenever it's a slight retrace, we do average down. That's what it's done there. It's averaged down a few times. And we close it out when that moving average band is broken on the price moving averages. We also pay attention to what the CCI is doing. And here is giving us an early warning. That was the earliest warning there. That was the first time it gave us a bullish divergence to that level. That would have been that same period on the price. So you keep reading that. The CCI keeps rising, the price keeps dropping. That's why you just keep extending that bullish divergence to where we are today. But overall, the last trade you would have taken would have been closing it out at that level, and that's why we've closed out any particular trades we would have taken at that level. Would have been closed out with a nice little return going short. So next, looking at BOIL on the daily, we would have been going along during that period with the CCI rising. That was giving us more of an indication of bullish momentum. You would have started going long there. But up until the 9th of December, when the price breaks below the moving average band, and so does the CCI, you would have started taking short trades on the hourly. And that's what we've got here on the back test for the hourly. Going short, similar sort of scenario, taking short positions and averaging down whenever the price retraces slightly, but maintaining short positions. Now where we are at the moment, the CCI is broken up, the price is in a downtrend and with a very slight retrace. But you'll notice back here on the daily as well, we've broken through this previous support at 26.01, and it's broken lower. Now there's no sign yet of a pullback. The only sign we've got is this bullish divergence on the hourly. So if we draw the trend lines on that, so that higher lows on the CCI versus the same period on the price, lower lows on the price, so that's a bullish divergence. Again, early days yet, it could still drop further, but that's giving us a bullish momentum on the CCI versus the price. If that was to break up from where it is at the moment, of course, it could drop further. We can expect a minimum retrace to that level. And of course, if that price does fall further, we just have to readjust that Fibonacci retrace. But at the moment, predominantly short trades only. Don't take long trades. We don't trade these bullish divergence. We only trade in the direction of the daily. So similarly, UNG is bearish on the daily. It's approaching this support level. And the CCI is still very strongly in a downtrend. No sign yet of a pullback on the daily. On the hourly, however, again, we've got another bullish divergence here. We drew it on our last video. So what we do is we just extend that to that level there. Pretty much the same level it is on the price. Again, if that was to pull back from where we are on UNG on the hourly, that would be our minimum retrace. Again, that's assuming the price retraces from where it is at the moment. Of course, it could go further and break below this support level, in which case we have to readjust the Fibonacci levels. So KOLD is the inverse pattern. On the daily, it's broken above the moving average band of the price. You can see there the CCI is also likewise bullish. giving us bullish momentum on the daily, which means we take long trades only on the hourly. Now, before I get to where we are at the moment, you'll notice I started long trades from that point there. The reason for that is, even though the hourly is still showing a fresh breakout back there on the 9th of December, with the price also above it there, you'll notice that price area is back on this candle back here on the daily. And that's a bit dangerous to go in that early. Again, we always go in the direction of the daily, giving us a bit more confidence. Never guarantees, of course, there's never a guarantee in any strategy, but when the price is that low on the daily, a bit too early and a bit premature. So had you got in there, that would have been pure luck to get in that early on the hourly. So anyway, we'd have got in at that level there, which is indicated here by the hourly arrow. It would have taken long trades only and closing it out when that price breaks below the moving average band, and then going long again when it breaks above. Now you notice here was a bit of a false break possibly. This one exited with a little profit. Again, this is exiting with a small percentage gain. And here the CCI is broken below, so stop taking any long trades on this one until we see both the price and the CCI in an upswing in alignment with the daily as well. I'd like to get some insight into some share trading ideas. These are some of the shares we've traded so far this month in December. In terms of dollar returns, they've returned 8,200 Aussie dollars, and percentage-wise for the month, that's 5.58%. To get access to those bullish shares, we do a weekly scan each weekend. Subscribe to the Patreon page, links in the description below. That like and subscribe button. Thanks for watching, and see you in our next update.